topic. In this webinar, we're discussing how to make a strategy. Now, essentially, you're not really making a strategy, you're just adding some creativity to what a lot of strategies that most people trade have been created a long time ago. You're not really creating anything, you're just picking what you like and sticking to it. So let's start with essentially what is it? Because you can't create your own strategy if you don't know what it is. A strategy is your game plan. If you're a footballer, usually footballers, when they are playing, they follow what are called plays. That happens in football, it happens in rugby, it happens in most sports. They're called plays. And all they do is repeatedly do the same formations again and again and again. Now, us as the watchers, we don't notice it. But the people like Ronaldo and them, they practice the same drills every time, and they give them fancy names, and they all should stand in different positions and so in different formations. And essentially, even like with defense, the defense team in a football, the defense team in a football also has their different formations and strategies they apply. It's the same thing. It's your game plan. What are you looking for essentially when you're doing your technical analysis on a Sunday? That's what it is. What are you looking for? And repeatedly do it again and again and again and again. So that's what trading is. We repeatedly look for the same strategy plays again and again and again. We don't guess whether it's going to go up or down. That's not what technical analysis is. Because I've seen a lot of people on YouTube, they do technical analysis and try to tell you whether it's going up or down. That's not your job. Your job is to have a strategy, which is like your game plan, and to follow it. That's all you're supposed to be doing, having a strategy and following it. That said, you should have a strategy in which if I asked you in 5 minutes, describe your strategy, you should be able to give an answer. If you cannot, you are doing technical analysis, the kind that's on YouTube, where they try to guess whether it's going up or down. Those are the kinds of people who will tell you, no, I think it's going up, I think it's going down, it's going to go up, it's going to go down. You don't have a strategy. Swing trading is not a strategy. I'll tell you right now, swing trading is not a strategy. Trend trading is a strategy. So swing trading is basically holding long positions for for a long period of time, and it's usually linked to trend trading. But essentially, swing trading is not a strategy, and I think that's why a lot of people who want to be swing traders struggle, because they can't get consistent results by trading support and resistance, because support and resistance is not a strategy. That said, the best way you can understand a strategy is by seeing someone else's strategy, right? So let me give you an example. Let me see if I can find my strategy. Bear with me for a second so I can see if I can find it. Okay, I can't find it, but I'll explain to you and show you some charts, and it gives you an idea of what I mean. So for example, if someone asks me what is my strategy, oh, this is options trading, something different completely. Say if someone asked me what's my strategy, I am a long-term and a short-term trader. On the long term, I'm looking for trend trades, right? Long-term trend trades. And then on the shorter term periods, like the 4 hour and the weekly, I look for traditional patterns like head and shoulders, rising wedge, divergences, those kind of things, right? So long term, I look for trends, and the trend for me is created by a divergence. I look first, if the trend is about to turn, I look for two things. Either there's a divergence there, or there's a pattern of some sort. So let me give you. So like I said, long term, I'm someone who focuses on the trend long term. So as you can see, this is the pound New Zealand, which I've been talking about for a bit. As you can see, I've drawn this, what would have if you had put in the beginning of an uptrend for me, right? Long term, entry. So that's my strategy long term, right? But the problem is I'm not going to eat until the trade finishes. So it's important for you to pick a strategy that also works with your lifestyle. Yes, this would be nice when you have four lots size on a long-term position, but what are you going to eat for the next 2 months? So it's important to also have a combination of a short term. If you look carefully, this will trade in a weekly trade. For example, let's go down to show you what's in my strategy for a weekly trade. Example of a weekly trade of mine. A rising wedge, right? If I had placed a mirror right here, a lot of these patterns will look unique to you, but realistically they're not, especially when you've seen them many times. So essentially, this is what I'm looking for, and I'm looking for a sell opportunity around this area. I like to wait for a breach, and then after I've seen a bit of a breach, then I'll sell to this position here. So that will be like a position play for the week, and that's my trade for a week. Last week, I took this sell here. We took the sell, held, take profit roundabout here. Actually, what happened here? Did I take profit? Oh, I took profit here because of this area here. So I took profit here and then it carried going down. So as you can see, this was a trade pattern. It's based on patterns aren't perfect. That happens. You should have, for me, I prefer to have an intraday trade, and then a long-term trade. One which is more investment oriented, like this trend trading, and then also one which gives me quick returns and which I've tested consistently, right? Another example of a rising wedge, say, let me show you. This is a position I think I entered it like 2 weeks ago. This was the traditional patterns. This was the start and then rising wedge, right? So here I'll possibly be waiting also for divergence. It doesn't say you should trade that. I just like traditional patterns like the rising wedge, head and shoulders, triple tops, triple bottoms, angles, and then divergences. That's what I like. Trend trading can be quite difficult because it's hard to get a return of above 20% a year if you're gonna do trend trading, proper trend trading, because in general trends are quite rare nowadays, and so you'll be holding your position for a really long time, and also because you're risking 1%. The returns are good, but it's better for a big account. You're gonna do pure trend trading. You're gonna have to have a really large account. I'm talking about 5,000 US dollar. I'm talking about 20,000, 50,000 US dollar, where you're risking only 0.5% a trade, because the entries for a trend trade are usually wrong. They usually get entries wrong because it's hard to get a good entry. But once they do, they can hold the trend for an entire year. And honestly, what are you gonna eat throughout that year? That's what trading, and these are for shorter terms so that I can trade both styles. And as you can see, for example, I want to show you just the difference. I have no reason to be putting a lot of money in it, right? As you can see, this is 0.3. I have no business for a very time. Whereas with a position trade like this, where it's because I'm going to start to close this one um, quite soon, right? So it just depends how, okay, uh, it just depends how you want to trade. So let me show you now some more examples of other strategies so you can come up with your own. Right. Let's start off with the common ones that you would know. Right, this is a good one to start off with. Say you pick moving average crossover and you say that's the strategy I want to trade. If you pick that that system and you're like, I want to trade the crossover, pick the moving averages you trade and the time frame you trade. So say you pick the okay, I like the 8 moving average, the 21 moving average, the 89 moving average, and the 200 moving average, right? So if you like those moving averages and those crossovers, you pick the moving averages that work for you and that you're going to test. Remember, this is first creating your strategy. It's not the one you're putting your live money in. This is you creating your strategy. So you've picked your moving averages. You've decided when certain moving averages cross each other, you're going to enter long and you're going to put a stop loss. And then when those moving averages cross over again, you get out. So you've created your strategy. You've decided which moving averages, you've picked your time frames, you've picked the currency pairs or the stocks, and that's what you trade. After you've picked your strategy, now it's also time to back test. Now you can also combine. Like you saw, I do trend trading and then I do patterns. I also do Fibonacci here and there. I don't like Fibonacci too much. I won't lie to you, I don't trade it often. Fibonacci for me is for retracements when I want to add into a position, simply because sometimes the 89 moving average doesn't do too well by itself. So I also like Fibonacci. So you need to be creative. So if you're going to do the moving average strategy, you might also want to look into divergences and Fibonacci. So, like for example, this cell here, um, it exactly. So let's take this example here. You would have entered long here, right? And then with divergence, you would have known that price is about to collapse here. You would have seen the divergence forming and then immediately closed instead of waiting until this crossover and you've given money into the markets, right? Or had it been a Fibonacci, you would have also seen that we've maybe hit um, a 0.68 retracement, right? And then you know it's time to get out. So that's a combination. That's one example. That's one example of a trading system where you say I'm going to do the moving average crossovers and then I'm going to do the divergences and Fibonacci. Let's see other trading systems. Let's see how it loads. I don't know why it's taking this long to load. Anyway, so this was supposed to open. I don't know why it's not opening. Okay, it's odd. Okay, right. So this is AstroFX's trading book, right? I'm not gonna be disposing their stuff, but anyways, this is AstroFX, right? So if you go through their book, they also trade traditional patterns, head and shoulders, for example, right? And then they talk about inverse head and shoulders, traditional patterns that I've been talking about, that I also trade, traditional patterns, double tops, triple tops. As you can see, some rising wedges, falling wedges, double tops, pennants, very popular. These are some patterns, some pennants. Sorry, let me just get to the pennants. Let's see. Okay, so that's basically it. So, like for example, they trade Fibonacci and traditional patterns. So on their, say on technical analysis on the Sundays, they would be looking for a descending triangle, for example, and then they're looking for an entry for that week to come. That's an example using Fibonacci with traditional forex patterns. That's an example of a strategy. Let's look at The Visual Investor. So this is a book that I highly recommend for people who are starting out, especially if you're looking for say a strategy. They trade trend, so excuse me, they do trend trading. So they look for trade reversals. As you can see, they define what a trend is. They trade long-term trends on the weekly and monthly charts. They look for reversals first, reversals at support and resistance. They trade some channels, trend lines, but they don't trade the traditional patterns, right? So some of them, I think I saw a few, but typically they don't really. This is stocks. It's mainly stocks, but it's very important. It's a very good book because there's also talk about chart patterns. So it's important to note. But majority of their trades is basically it's basically trend trading and not the other stuff. The other stuff they just talk about so that you have an idea of them, but their main strategy is trend trading. And for example, the moving average, simple moving average, that's one strategy for someone who wants to trade the crossover strategy. Um, Divergences is a whole nother strategy on its own. You can even choose to trade divergence on the daily and the 4 hour, the daily, and the weekly. That can be a whole strategy on its own. That's how I started out mine. I started on just divergences on the 4 hour, the daily, and the weekly. And then you look for divergences at the support and resistance. And then ultimately that can change to a trend. So, for example, if you say your strategy is I trade trends and I look for a divergence at the support and resistance to change the trend direction, and then I hold the position for a long term trend, that's a whole strategy in itself. MACDs, that's a whole nother strategy. Yeah, so it's interesting strategy. The candlestick Bible is the strategy on itself. They talk about mainly it's price action, but mainly pin bar formation patterns. If you enter a sub, if you enter resistance and pin bars, and a few moving averages. I think he talks about the 8 moving average, 21 moving average, and 50. I think so. It's his strategy is pin bars, support and resistance, 21 moving average, and the 8 moving average. That's a strategy of some. Come to my trading room. Let's see what their strategy is. Oh yes, I know why I pulled this up. You could also have a strategy which is day trading. Your strategy could be day trading. If you're someone who has all the time in the world, you can trade a day trading strategy. Or if someone who has access to the internet and their laptop all the time, you can trade a day trading strategy. That's also it's a possibility. Now, I want to caution about some of these strategies before you. So now we've identified different types of strategies, and that you should now own your own strategy, different pairs patterns you want to trade. What's your strategy? What patterns do you want to trade? Are you a trend trader? Are you a moving averages trader? What's yours? You need to be creative to create your own, but you shouldn't also be trading everything. You can't be a divergence trader and MACD trader with you can't divergence trader, MACD trader, stochastic trader with Fibonacci and a trend and support and resistance. Otherwise, you will overwhelm yourself and you will essentially end up just counteracting all your gains and just get going to zero at least. So be very careful. Number two, with the moving average, crossover moving average, I've rarely seen anyone be consistently profitable with that strategy. I'm not saying it's not doesn't work. I'm just saying it's a rare. Trend trading, like I've said, a good target for a trend trader would be making 20% a year. That is very good. But the good thing with trend trading is that most of all the strategies, trend trading actually has the highest level of consistency. Most people who trend trading strategies are very consistent. Now that means obviously their gains are much lower. They're consistent. What else should you know? The patterns are not always perfect. Remember, what tends to happen is that obviously when brokers start knowing people trade the same, I think it's in the book Where the Turtle, and he talks about how certain strategies become obsolete over time. And it's based on the idea that basically when everyone starts trading the exact same way, institutions start trading the opposite direction. So when institutions know that one's trading double tops, essentially they buy when you're about to sell. That's basically in a book Where the Turtle. So that's just an example of some strategies before we head into making a trading plan. Because making a trading plan is more than a strategy. You've come up with a strategy, right? After you've come up with a strategy that you want to trade, that fits your personality, that you like, that you're good at, you have to stick with it. There's no perfect strategy. If you think that the perfect strategy is one that gets you 70% returns with risking $0, or if you're looking for the perfect strategy, you're not going to find it. Don't bother looking for the perfect strategy, you're not going to find it. Find one you like, one you understand, one that clicks with you, one that fits your personality and your lifestyle. There's no point in trading a day trading strategy when you're someone who is busy for 8 hours of the day and you can't check your trades, right? If you're someone who's busy 8 hours of the day, trade a trading strategy where you have to check your trades twice a day, in the morning before you leave, and in the morning you come back, and then when you come back. So that's a strategy that fits your lifestyle. We're gonna get into some of the trading journaling, trading plans, and the other reporting stuff. But basically, you test your strategy. After you decide that you want to trade, it's time to test it. Test it with there's no, if you test it with the software, don't bother. You have to actually trade it, and record every single trade. And it's a grueling process, but it's necessary so that you know roughly what percentage your system makes throughout a year, and also knowing what's the drawdown rate for your strategy.